Live. Well, that sucks. I haven't been live for the past 18 minutes. That sucks. Oh my goodness. I'm so sorry, everybody. I thought I was live already. I forgot to press the little button. That's what happens when you're new to the trade. Holy smokes. Let's just do a quick recap for everybody that wasn't paying attention. Let's walk you through everything. So right now, the dollar is coming down. We're waiting for CPI data. JP Morgan is expecting it to be higher than expected. Most banks are expecting go in line with everybody, right? So 3.3, we're talking about 0.2, which is the right rate for the Fed to be increased to the right rate for inflation month over month, which is a good thing. It'll be interesting to watch core inflation, make sure it's being curtailed with everything that the Fed is doing. Oh my goodness. That is crazy. I forgot to press the live button. That's hilarious. Now I know. Now I know. But yeah. So let's see what's up. What's up? Yeah. We're waiting probably you're gonna get a lot of movement in the dollar. S&P and QQQ are gonna have massive movements.
We are now 10 minutes away from the bottom of the hour, where we do get the headline event for the day and for the week, which is the US CPI data for the month of July. So year over year forecast is 3.3% from the prior 3%, with a range of 3.5 to 3.1% expected. While month over month the forecast is 0.2% from the prior 0.2%, with a range of 0.5 to 0.1% expected. For the core reads, year over year, the forecast is 4.7% from the prior 4.8%, with a range of 4.9 to 4.6%. The core CPI month over month, forecast of 0.2% from the prior 0.2%, range of 0.4 to 0.1% expected. So as well as this data, do get the release of the weekly US initial jobless claims number, a forecast of 230k from the prior 227k, with a range of 240 to 215k, and the continued jobless claims forecast of 1.707 million from the prior 1.7 million.
All right, let's do a quick overcap.
Looking at some analyst commentary ahead of this CPI release. So Wells Fargo say that the consumer price inflation is steadily moderating. A headline CPI rose just 3% year over year in June, the lowest annual rate since March of 2021. So Wells Fargo note that a large portion of this downdraft can be attributed to slowing food inflation and an outright decline in energy prices relative to their highs in the summer of last year. Wells Fargo also note that core inflation has been a much tougher nut to crack, registering a firmer 4.8% annual rate in the prior report. But even core CPI started to demonstrate some downward momentum in the month of June, driven by softer goods prices and the ongoing disinflation from primary shelter.
Primary shelter is starting to
Wells
come off.
Fargo expect the disinflation trend to continue in this month of July, and estimate a 0.2% bump in both the headline and core measures in a month-over-month reads. So looking under the hood, they expect faster deflation for vehicles and other goods in the month of July, counteracted by slightly firmer prices paid for travel and medical care. If realized, Wells Fargo say that these prints would translate to a 3.3% annual headline rate year over year and 4.7% annual core rate.
Everything is bouncing off the lows. I mean, so far.
Seeing some analyst notes in the markets as well at the moment, saying bonds are at risk for the CPI head fake. So Treasury investors are leaning towards a friendly inflation report today. Any rally in bonds might be short-lived, according to analysts on the wires.
Oh, really? We're hoping to get really? That's crazy. I mean, like, market overall, sure, for the last month has been green, just thinking that this is going to be good. But the question is like, in the last week and a half, we've given a lot of the gains. Like, we've turned back, not enough, but we definitely turned back a lot. So that could be a lot of downward momentum. It's going to be an interesting day, guys and girls. Rad. Mm-hmm. Let's have a look. All eyes. It's interesting because we have a lot of negative catalysts from the last week. There's a lot of negative news right now, and the good news have faded away. So if we get some good news right now, this would balance the market. I do think that we do get a bounce from the resistance levels that we're on right now. It's just market breadth. I think the volatility is extremely high though, so it's extremely tricky if you're in markets. That is for sure. Have a look at the news. Yeah, I mean the market is getting ready. There's a lot of de-risking yesterday, that is for sure. Or even the last couple of days, there's been a lot of de-risking based on everything, you know, looking at the whole week. Because tomorrow we have PPI, Producer Price Index. That's going to be an interesting one. Producer Price Index last time was actually great. All the data that came out last month was fantastic. So I don't see anything different for this one. We'll see what happens, but I think even if we meet expectations, that should cool off markets, you know?
So we are now 5 minutes away from the bottom of the hour and the release of the US CPI data for the month of July. Year over year, forecast at 3.3% from the prior 3%, with a range of 3.5 to 3.1% expected. Month over month, forecast is 0.2% from the prior 0.2%, with a range of 0.5 to 0.1% expected. For the US core CPI, year over year has a forecast of 4.7% from the prior 4.8%, with a range of 4.9 to 4.6% expected. The core CPI month over month forecast at 0.2% from the prior 0.2%, with a range of 0.4 to 0.1% expected. With this data, we also get the US initial jobless claims numbers for the week, forecast at 230k on the prior 227k, with a range of 240k to 215k. We also get the continued jobless claims, forecast 1.7 million from the prior 1.7 million. So we're also noting Treasury yields extend declines ahead of this July CPI report in just around 4 minutes time now. So looking at some more analyst commentary, a note from ING, who note that unfortunately there is a little bit of upside risk to the year-on-year figures after their recent slowdown of 0.5%, but this reflects falling energy costs last summer, dropping out of the annual comparison. However, ING notes that the Federal Reserve will be focused on the month-on-month readings, which are hopeful to come in at 0.2% month over month for headline and core, both in CPI and PPI, they note. ING also says that this is what we need to see consistently to bring inflation back to the 2% target, and the Fed can take comfort that inflation pressures are softening, reducing the need for further interest rate increases, according to ING. Also a note from BlackRock, who say that all eyes are on this US inflation print this week, after the softer than expected data in CPI's last print. So BlackRock see persistent wage pressures keeping core inflation sticky.
Right. Getting ready, everybody. Get your mouses ready because we're definitely gonna be trading this one. Holy. We're either getting out of our position, which is a really risky one right now, because it, like, you know, this jumps quick and we're actually a little bit delayed before the big banks and the big people and the big things and the big market players. So it'll be interesting to see what happens. Gotta be careful with the whiplash too. Whiplash, remember that. If we're too late, we wait. Let's go to the minute. Let's go here and let's see what's up. What's my position on UPRO? We're talking about. Oof. Yeah, we're a minute and 30 seconds away from market data.
1 minute remaining. I'll be leading with the US CPI year over year.
US CPI year over year, we're looking for 3.3. 3.3 or lower. 3.3 or lower. We are looking for lower. This is gonna be interesting for sure.
Ten seconds.
All right. I'm ready.
Three spot 2%, 3.2% lower than
That's
forecast.
better than expected.
3.3% month over month.
Core is good.
0.2% as expected.
Everything
Core
is
CPI
good.
year over year. 4.7%, 4.7%.
Let's see the markets rally now.
Core month on month.
They should cool off markets. It's not perfect, but it's great.
So US initial jobless claims at 248k, 248k. That is higher than the forecast of 230k.
There is, you know,
with continued claims coming in lower at 1.684 million, 1.684 million. Again, lower than forecast at 1.7 million. So looking to the markets here, just seeing some downside movement in the dollar and some upside movement in the S&P 500. That is
perfect. We're extremely well positioned for that. Let's see.
Bitcoin and
Let's
WTI
go.
catching some bids off of this release as well. So again, to go over this again, US CPI year over year did cool off 3.2% on the prior of 3%, but lower than the forecast of 3.3%. Month over month reads and the core year over year coming in as expected at 0.2% for those month over months.
Whoop, I put it wrong. Huh? Let's send that data to the people that want it. Bam. Yeah, we should definitely see a rally based on this news. I mean, the 3.2, it's a little bit higher, but it's lower than expected,
the US
which is
short-term
great.
interest rate futures gain after the CPI inflation report as traders firm bets against another Fed rate hike. So again, traders firming against another Fed rate hike in the short-term interest rate futures, which are gaining after the CPI print.
Yeah, let's have a look. Everybody have a look. Bam. Everything should be green for the day based on these results, as long as there's nothing too crazy out there. It's as expected. There is no news. I wonder if there's any revisions. Let's have a look. Here's CPI year over year. Let's have a look. Shelter. Oh, wow. Shelter's up. Oh, that's interesting. That's very interesting. Let's have a look.
So again, dollar weakening after the CPI data there. Dollar yen ebbs and falls after that data. Last down around 0.26%.
Ooh, Shelter's back. Shelter's the
Just to make our users aware as well, we have posted out the jobless claims report for the week on the feed for anybody interested.
Transportation services.
So also noting here, US Treasury yields are dropping after the CPI. 10-year yield last at 3.967%, and 2-year yields at 4.739%. Also posted out the US CPI report now for anybody interested.
Interesting. Commodities are down. Energy is down. Not by a lot, but it's still down, right? That is good news. Energy services. And then we have energy, and energy is actually up. So that's going to definitely... I'm surprised. But food... all items. It's not bad. It's not bad. That is within the guidelines that they're looking for, which is great. That is great. It's 3.2. That's not bad at all. This should rally markets. As long as we don't get any more catalysts, we should definitely see market rally today. It is as expected. The Fed is not going to have to do anything radical in order to change their course. Markets are giving away their gains. Interesting. Not much, but they are. Be interesting to see what Apple does. It's been in such a bad downtrend. Very interesting. Go to the Fed Watch tool and let's evaluate what's the percentage of a rate increase in the next couple of months. I don't think we're seeing an increase. I think we're going to stay steady and see what's up. September, pretty much steady. And we're mostly at 60. September, we're probably not going to hike. November.
Looking through the CPI reports here, just noting the top contributors to this CPI read. So the top 3 positive contributors being transportation services, which are up 9%, food away from home being up 7.1%, shelter up 7.7%. Negative contributors consisting of fuel oil, which is down 26.5%, gasoline under the all types category down 19%, used cars and trucks down minus 5.6% in this report.
That's very interesting. Look. The actual report. Next release, write it down.
So Fed swaps price in lower
13th.
odds of another rate hike this year.
Not good. Should be the same. Used cars? Point 3. Let's look at shelter for a second. Up, wow. Holidays is getting cheaper. Motels, so people are traveling less, at least in the States. Apparently most of the travel benefits have been on the what's it called, on like away from the States. Household insurance is up. Oh wow, so rents is up. But it's still within normal parameters. It doesn't freak me out. I'm not freaked out by this report. I mean, like most of the gain was done before. I don't think the market is finding anything too crazy about this. Markets are up today, but nothing too nuts. Stuff. Gasoline is way down. I mean, so far I like that. I'm not too opposed. I wonder what that's the reason why it's going up, right? Because like last time July didn't have any increase. Okay. I think markets are gonna like that. As soon as we see market open, this should be just fine. This should be just fine. Today's gonna be a great day. Shouldn't be worried. Hopefully there's no more downgrades and everybody has calmed down. Holy smokes. It's like, I don't know, it feels, I don't know, the downgrades feels like, hey, everything went down, we should have told you, we didn't, so here you go, have some information. See what Mr. Kevin says, because he's definitely going to be talking about this. Gotta go 9 minutes back from his stream.
The Lazy Boy or loves.
Oh, he just started streaming 9 minutes ago. Nice.
Pretty much right on target. So this is along expectations. This is good. We really didn't want to get anything hot here because it would really shake in the disinflation area. And we're not in like the super happiest time right now in the stock market. Although futures are climbing at the moment, which is good. Let's see. I know there are a lot of people though who are looking for another opportunity to buy. It's we've had like 3 weeks here almost of an opportunity to buy. Let's see what we get in terms of some of the numbers here. CPI a little weaker than expected on that year-over-year rate. Let's get into the actual report. Here it is popping up right now. All right, let's get that screen to show.
August is gonna be hot.
Sorry, 1 second there. CPI.
I have a feeling August is gonna be hot.
Was by far the largest contributor to the monthly increase for all items, accounting for 90% of the increase. Holy crap! This is the first time we've seen 90% of the inflation in the BLS report come solely from shelter. That's insane. That means as soon as that shelter move is gone, there's nothing left. We're probably at deflation. The Financial Times actually made a whole counter argument though to China exporting deflation, which was an argument Kathy Wood made just the other day. And Financial Times doesn't seem to agree that China is going to be exporting deflation. But boy, that is not a lot of leftover inflation, at least based on the way the government tracks it here. I know a lot of folks have been pretty frustrated, especially by food prices. Here are actually food prices, seasonally adjusted from the month before. Look at this, 0.2 here for food, 0.3 for food at home, 0.2 for food away from home. We're gonna get into some more of these details here. Food accounted for 0.2. Food, okay, we just read through that. Let's see here. We have energy index rose 0.1% in July after increasing 0.6 in June. Gas 0.2% in July. We think this will actually be higher for the August CPI report. So buckle up. We are.
Okay, so giving away the gains. This is very interesting.
Because if we end up getting a big energy boost next month, there's a question of, okay, is the Fed going to be willing to look past an increase in headline because of inflation rising in energy? Are they going to look past headline and only focus on that sort of sticky core section? The index for all items less food and energy rose at 0.2% in July, as it did in June. Shelter increased 0.4%, the same increase as in June. Index for rent rose 0.4%. Owner's equivalent rent 0.5%. Index for lodging. This was surprising to me. It really seemed like you got that international travel boom outside of the U.S. Like U.S. travelers went to Europe and other places. And what did that actually lead to? It led to a decrease in lodging prices in America. I mean, this is quite frankly the opposite of what I was expecting to some degree. The shelter index was the largest factor in the
wow, we're giving out the gains from today. Market, huh? After rising 1.7%. You're digesting
still pretty aggressive here on insurance prices, catching up, a lot of catch up here. Those are part of the stickier services sector, so not so great. Education, recreation, also up there. Keep in mind that these insurance premiums have been skyrocketing for real estate sectors as well, especially in places like Florida. I mean, look at what's going on now in Hawaii. It's absolutely devastating. What's going on in Maui? You've had over 30, I believe 6 people die now in Maui as a hurricane pushed fires to historic old towns. Very sad. Several indices declined. Listen to this, led by airfares. What? Which fell 8.1% over the month. Its 4th consecutive monthly decline. The index for used cars and trucks fell 1.3% in July after decreasing 0.5% in June. I'm gonna take a quick look and see what the suits are saying here. The suits are reacting to this as well. Also, quick reminder, first link down below. We're now doing actual financial advice. Got a team of financial advisors now, which is super cool. So whole portfolio reviews, fundamental analysis, really neat. So check out that first link down below, or email us at Kevin@StackHack, or get stacked with StackHack.com. Okay, so market. Let's see. Okay, CPI food prices for 4 out of 6 major grocery food indices increased on the month. It's quite a bit, 4 to 6. Got let's see here. The shelter cost increase. This is what I wonder. Like everybody keeps saying it's gonna roll over. When, please? When? Shelter cost index is expected to wane in time, incorporating the slowdown in rents that happened a year ago. But housing costs further out are more of a question mark. Okay, we also got job numbers just now, by the way. Weekly jobless claims coming in at 248,000 versus 230,000 expected. It's a little warmer than expected, although continuing claims falling, implying people are able to get jobs. Kind of weird. Fed swaps are now pricing in a lower chance of another rate increase. My expectation, by the way, with no rounding, was that inflation would rise 0.15%. It actually rose 0.16%. If you want to do the actual math on that core CPI figure, we're looking at 308.8 versus the consensus of 308.941. And the prior read on that actual number for core was 308.309. So you can divide those and get 0.16 was the actual number over my core, and I was looking for 0.15. But of course, that gets rounded as we look at the first digit there after the decimal. Communication declined 0.1%. Index for used cars and trucks fell 1.3%. We have waiting for Supercore. Supercore takes a hot minute to get calculated, so that'll come in here shortly. Dollars weaker after the report. Prices that held inflation down: airfares, used cars, trucks, medical care, communication.
Eurozone government bond yields tick higher after the US data.
Okay,
Germany's 10-year yield up around 3 basis points to about 2.49%.
Oh.
Consumer price index. Okay, we saw this. This is some of the numbers here. These are some of the numbers that are to help us calculate Supercore, which we'll do in a moment. Trying to get some more of the deeper data here. Let's see. Prices for various items, fine. Same thing. Okay, let me get to the chart now of all of the items. But so far, this is pretty good. We want to see economists start getting more accurate with their estimates here, because it's usually in like recessionary times that the accuracy of these reports goes to crap. I mean, remember when inflation was starting to hit, nobody was getting it right. We were off by orders of magnitude, it felt like. Okay, let's look at these actual categories. So what do we have here? Now, food did rise 0.2%, but we're okay with 0.2%. The problem is, I mean, you got bread rising like crazy here, 0.9%, not great. Meats rising 0.5%, also not great. You got dairy products up 0.5%.
Is that because
also
the
not great.
weed?
Fruits and vegetables up 0.4%.
Price of weed has
Not great.
increased, right?
Non-alcoholic beverages, 0. Coffee, 1% in a month. Let's make sure of that really quick. Yep, there's our June 2023 to July figure, so our far right column. All right, let's get to some of these other good sectors. So now we're in goods. Goods right here. We want to see disinflation, maybe even deflation. Look at that. Window and floor coverage.
Oh,
minus
okay,
1.3%.
okay, that
That's
makes
great
some
for house
more
hack.
sense.
We're going to be raising money for non-accredited
Nope, it
investors
does
very
not.
soon, which will be very exciting, probably the next 2-3 weeks here.
It
We're very
does
close.
not.
Now that we have sort of a thumbs up-ish from the SEC. Well, I don't know if that's the right wording for it, so ignore that. You can go to the SEC filings page to learn more about it. Furniture and bedding, minus 0.4. Window coverings, 1.1 to the downside. Furniture, 1.2 to the downside. Although, I believe, is it Lazy Boy or Lovesac? One of those is starting to look pretty well. Appliances up 0.5%. Starting to see home builders increased demand here for, it looks like at least some appliances, but we have other appliances. I'm not sure exactly which category is giving us that, given that the subcategories here are negative, but okay. What else we have? Other household equipment furnishings up 0.5%. Clocks, lamps, decor, fine. Tools and hardware, outdoor equipment, 0.7 to the downside. Household supplies, flat. Apparel, flat. That's the apparel broadly. Transportation commodities, less motor fuel, negative 0.5. That's gonna be for your tires. Used cars, trucks, negative 1.3. New cars down at 0.1%. This is what we're expecting based on the auctions data anyway. So this is great. Dollar's weaker
So
after
the
reporting
dollar
signing
pairs
market
its
this year.
declines now. The
This is
dollar
great.
index
Remember, Bill
now
Ackman
down
shorted treasuries,
0.3%.
10-year was sitting at about
So the
1.2.
S&P
More yields
500
fall
also
before that
paying
short
its
is actually
gains
going
here
the
as well.
opposite
It's still up to
direction.
about
And, that's where
2% on the
flat 4% right now,
session.
with Nasdaq almost up 1% here. So we'll keep an eye on that as we get a little bit more data. It's actually closer.
I think there's going to be
to-
de-risking.
Continuing on, medical care commodities up 0.5%. These are all our goods section still, right? A lot of disinflation in these goods. Pet products negative. Sporting goods up 0.1%.
This is interesting.
Photography, equipment, 3.3.
We're pairing
Red
our
goods, 4 to the
gains.
downside. Almost all of this is negative in terms of goods. Alcohol 0.1%. Alcohol away from home 0.2%. Personal care products 0.5%. There's shelter. Look at that. 90% of the increase, folks. Shelter, shelter, shelter. And it's not even lodging away from home. Wow. Other lodging away from home, including hotels and motels, negative 0.5%. It's only rent that kept us going here. That's remarkable, especially since leading indicators are we should be flattening out on that. Medical care services, negative 0.4%. Good. Good, 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 good. Transportation services, 0.3%. Also good. Motor vehicle insurance, that's painful. 2% right here. Not great. Motor vehicle repair, not great. Those together sitting at about 3% of CPI. Public transportation down. Recreation services, 0.8. Not great. 0.7. Not so great, but only about 0.5% of weight on CPI. Okay, education services 0.3%, which have a 4.7% weight. Postage and delivery down 1%. Telephone services 0.1. Haircuts 0.6. Miscellaneous personal services negative 0.5. And then look at that here. Financial services negative 3.1%. Yeah, that's probably because for a limited time we're now offering licensed financial advice for what we think is a really, really great price. Link down below. It's not commission based either. It's a really good consult. Okay, let's get a little bit more look at what we have here. Zooming in on rents, the biggest and most important component of core inflation. Owner's equivalent rent rose 0.49% in July, marking actually a slight acceleration over June's 0.45% increase. So this is the part that needs to roll over. So when is it going to roll over? It's actually trending up rather than down. A little weird. Today's data shows disinflation may prove choppy from month to month. Well, yeah, no kidding. Cost for nursing homes surged by 2.4% month over month, not great. Housing at school went up by 0.9%, and that's as college is about to begin, so not that great here. Looking for a little bit more data on where our super core figures are. Just a moment, but we're gonna get charts in just a moment here. Let's see here. Okay, what do we have here? Okie dokie. Energy prices fell in July, a reading from the prior year and decelerated. Yeah, we know that. Okay, what do we have? More data here. Headline 0.2. We know it's only 0.16. That's fine. Goods and services. Let's see here. Year-over-year services at 6.1% to the upside, or something super core. Okay, here we go.
No, we're coming back. Yeah. Okay.
0.019 on Supercore. Supercore month over month, 0.019. Annualized, that comes out 0.019 times 12. Annualized, that doesn't mean it's essentially flat, 0.019. Can that be right? Hold on a second. No, that can't be right. Let's see here. We have, doing a calc, let me do it myself. Negative. I'm gonna send over this screenshot in a moment here. Let's do this together. Okay, because we got a negative component in here as well. I have a chart breaking it down now, and we'll go ahead and go through it together. Okay. So we'll get super core in a moment. Wall Street information's actually coming through a little slow and boring right now. Okay, pretty quiet otherwise. Let's get this here. All right. Give me 1 second here. 0.63 on the NASDAQ. Okay, there we go. So this is what we've got in terms of, what have I got? There we go. Okay, here you go. So this is what CPI month over month looks like. This is a lot easier to visualize. So CPI month over month looks like this. Remember, it comes in at 0.167 to be exact. My estimate was 0.15. This is the month over month figure. Core number comes in at exactly 0.16. And then here's our super core, which, there it is, 0.19. 0.19, that's more correct. 0.193. We multiply 193 times 12 to annualize. You're sitting at about 2.3% annualized super core inflation. And you can see some volatility in this, with transportation services adding a little bit more than they did in the last month, but not as much in the month prior to that. That's your blue chart, bar chart on the right. You've got medical care services actually adding to a weight to the downside, with 0.1% to the downside. You've got, let's see what else we have here. Rec services contributed a little bit more, almost at that 0.1% now. Education services popped a tiny little bit as well, 0.05. So there's our super core, 0.19. It's good to see it under 0.2. It still annualizes over 2%, but 2.3% on an annualized basis. You look at that, that's good enough for you to say, hey, flexible average inflation targeting, and it's gone. Oh, you can't see it. Sorry, my bad. There you go. So this gives you that super core chart without me sitting in front of it again.
Like,
193. So NASDAQ now rising, sitting at about 0.85%, looking at SPY as well. We'll get some other data here. SPY sitting at 0.54%, waiting for treasuries and break-evens to move as well. Inflation largely in line. Claims jumped a little bit. That might be a story for today. Is claims rising a little bit, but then again, continuing claims are coming down. I think that's important to mention as well.
5.3% for 3
people lose their
months.
jobs,
That's not
one thing. As
bad.
long as you can get another job, you can keep spending. Inflation break-evens just fell. We're looking at 2.24% on the 5-year break-even right now. If we go to the 5-year forward, this is a new one that all of a sudden people are really focused on to average over the next 5 years, which the 5-year break-even tells us at 2.24. People are looking at the forward 5-year break-even. Forward 5-year break-even says, okay, going out 5 years, how much do we think inflation is going to be in 5 years? So in other words, in 5 years,
It's interesting how the
forward 5
news
years.
gets out. You know, it's like
But anyway,
news gets out,
see a
then
little bit of
everybody
volatility
starts getting the
leveling up,
information.
which
Bam, bam, bam,
Here we go.
bam,
Yeah,
bam,
that
and then
so
slowly
that
you see
explosion on the
markets
right
act.
side,
You first
that
like get
forward 5 year
traders
is
that are paying attention
a
to
little
this, and
bit
then
of,
they probably capitalize some
nervousness in
gains,
markets.
and then
So
just slowly
explosion
the
is
rest of
something I
the
think
demand starts
more
coming in.
although now it's
That is super
inflation
interesting.
data. I think you're seeing some soft.
Well, yeah. Sanity. What else do we have for the rest of today? There's a couple of US auctions, but they're gonna be interesting to keep an eye out on, just to make sure that they don't go nuts. But I don't think we should get any surprises. We're 1% up. Let's see, the overall portfolio is sitting at 0.91. So I don't think it's as good, but I don't think it's as bad as people think. You know, the problem is markets were really hyped up at just the seismic drop of what it was last time, and that is a problem. I need to make sure I keep the CPI reports downloaded somewhere. I can always look back and stuff. Very interesting. Happy with my participation. Alright, thank you so much for watching. My analysis should be there. We should be seeing a green day. Keep you guys updated in my Twitter. See what's up, but I'm happy with the results. I am very happy with the results. Let's have a look at this. Check this out. Anyway, now thanks so much for watching, everybody. Stay goddamn sexy. Sorry for the delay, and peace out. Hope you make tons of money today, everybody.